Welcome back, Alpha Hunters. Okay, the market just closed for this week, this Friday, February 4th, and we had quite a week. I don't know if it was as busy as last week. It definitely seemed like it was. We definitely had a lot more earnings this week from other big tech companies. So we'll walk through that for just a second, and then we will then look at some analysis I said I was going to do in last week's video. I just wanted to continue on and wrap that up, so I'll talk about that a little bit later on in the video. So you want to stay tuned for that, as I potentially found something that looks like it might be kind of interesting to know on when we can say, okay, the market's done, we can expect a rollover, that kind of thing. Okay, so let's just walk through this week, kind of what went on. So we're looking at the SPY here. We saw some bullishness on Monday, probably just carried over from Friday. And Apple's earnings from last Thursday just had a bullish day on Friday, probably just carried over on Monday. And then Tuesday, I don't really know if there was any major earnings Monday after the bell. There was earnings, but I don't really know if it was anything major. And then Tuesday after the bell is when the magic kind of started happening. So I'm going to go ahead and reposition this point here to that top right there, as I was looking for that bounce, and then I'll just reposition this bottom right here, probably to late March, something like that, maybe early April. I'm okay with leaving that out there for now. And then what the Qs looks like, a little bit more volatile on the Qs this week, as we did have a lot of big tech earnings come in. So that was what we were looking for. And if you've been following me, I was looking for that pull up into the 200 moving average. So we definitely got that, and that's what the green line is. That's where I have a bearish put vertical. So I was looking for that pull up. We got it Wednesday, and then I took it over. Now I got into a short position, okay? So what we saw this week, obviously it was Monday, just a carryover from the previous week. Tuesday, probably just in limbo. A lot of people waiting for the earnings that was coming Tuesday afternoon, Wednesday afternoon, and Thursday afternoon. So Tuesday afternoon, we got two pretty big companies to report. We got Google first, Google and AMD, but we're gonna talk about Google first, okay? So Google first, they opened up Wednesday, and then they sold off the whole day. I actually tried to play it bearish, kind of at the bottom of Wednesday, looking for a continuation bullish from the pullback, but I took that off Thursday morning after Facebook reported, and we'll get into that here in just a second. But then we had AMD also reported Wednesday, and they reported pretty well, but they also gapped up and faded down. They also gapped up to kind of this resistance area that had previously been support. So they just kind of sold off. I don't know if they bounce here from not, or they just kind of hang out and then roll over. You know, time will tell. We'll see. Okay. But then Wednesday after the market, we had a few kind of big companies report, big one being Facebook. Okay. I'm sure many people heard this one. Heard about this one. If you are active in the markets, you probably did. This one, Facebook announced horrible earnings. They basically said, hey, we spent $10 billion to help develop the metaverse. And they had not previously communicated that. In my understanding, they had not previously communicated that with investors, that they were going to be spending a lot of money in developing the metaverse, right? They have recently changed their name from Facebook to Meta Platforms. And so Meta Platforms is now the umbrella that holds, you know, Facebook, Instagram, and all those different WhatsApp, all those different app type products. And they are developing different reality worlds and stuff like that. So that was the whole point of the whole rebrand from Facebook to Metaverse. But they did not do themselves justice by shocking or surprising Wall Street with, hey, we're spending an extra $10 billion to develop something when we don't know if it's going to work. Okay, right? I mean, nobody knows if the metaverse is going to be the next great thing. So that was not good. But another little side note for you guys out there, they did announce that they are going to change their ticker from FB to META, Meta. Okay, I did not see when that was going to take effect, so we just have to be on the lookout for that. If I do see a date, I'll let you guys know. I just hadn't seen one. I'm sure it'll probably come here in the next couple weeks. Or another report that came out, or that I saw today, and it wasn't really a part of their earnings, but apparently Mark Zuckerberg had a company-wide kind of town hall on Zoom. I don't know if it was a company-wide or just a lot of higher up managers and stuff like that. But basically what he said was they are getting their butts kicked by TikTok, and they are seeing a lot of competition from TikTok. So they are trying to get their teams to start to really build out our short video resources for the community to use. They actually did report this, that they actually had a decline quarter over quarter in active users for the first time ever. So that's a big deal. If you're a social media company and you don't have the social aspect, well, then you don't have the media aspect, which means you don't have the advertising revenue, which is what drives their business. So I actually think not that really 10 million, not really the $10 billion was the big deal. I think it's the more of the active daily users. So that is something to watch. I do have a bullish position on it, as I do think this is just too much of a gap down. I think people are going to step in with a bargain, try to buy this up. So I do have a bullish position over, I think, a week or two. So I do have that on. Kind of like how Netflix played out over the past 2 weeks, right? If we look at Netflix, we got that pop. That's kind of what I'm looking for on Facebook. So that is that. One more side note, we'll go right back to Google. One thing that Google announced that I didn't cover when we were talking about Google, they did announce a 20-to-1 stock split that will be taking effect in mid-July. I think it was like around July 15th or something like that. So it's going to take effect quite a bit later. So kind of do some homework around if you want to play that, because Apple and Tesla, they both did stock splits back in 2020. So if you do want to go look and see what those companies did, you know, do your homework, know what you're trying to do. And that was one of the reasons why I did try to take it bullish. But after the Facebook earnings fiasco and I saw that they gapped down, I just said, nah, I want no part of this. But I just want to leave you all with that note, that there is a 20-to-1 stock split coming on Google in July. The other big earnings that came out Wednesday after the bell was Qualcomm. Qualcomm reported pretty good earnings. And this was Wednesday's trading action. This was the day after their earnings. This red candle with this massive upper wick. It actually got all the way above the previous day's candle and then traded back down. And really, if we look at it, it was all in the first like 15 to 30 minutes, right? So this is it. Like, it got bought up and then just sold back off and just kind of hung out for most of the day. So that was just kind of interesting. Spotify Technologies was another one, and they missed pretty bad. I mean, I'm sure most people know about the Joe Rogan issue that they've been having going on. And this earnings reporting period really shouldn't even have taken into account the Joe Rogan issue. So if the Joe Rogan issue really is an issue on earnings, we'll see that probably more in next quarter's earnings. But they did not have a good quarter either, so people sold them off pretty good. So that was the big, probably the bigger three earnings that came out of Wednesday. And then Thursday after the bell, the big one, Amazon kind of saved the market. I'm not gonna lie, this week, after Facebook's fiasco from Wednesday and on Thursday's trading day, yesterday after the trading day or Thursday after the trading day, Amazon reported a just knockout quarter. But here's the issue with Amazon that I do see. So if I go to a weekly chart here on Amazon, AMZN, we've had this support down that we've been bouncing above. And then 3 weeks ago, we got below. We just traded right down through it and below it. And earnings basically took us right up to it. We didn't even close over it. We hit our head on it, and I don't know. I don't know what to think on Amazon. It's gonna be a tell on Monday, Tuesday, this next week, really what happens here. I would say it needs to get above this pretty quick on Monday, Tuesday, and just kind of hold that. If it doesn't, if we start selling down, but maybe the market does sell down now that all the big tech earnings are out of the way and the market goes back to selling, right? Because the market was selling before the earnings of these big tech companies, and now that they're out of the way, the market might get back to selling. We'll just have to wait and see. But Amazon, its blockbuster earnings had the market up pretty big post-market on Thursday. And then all of a sudden you wake up Friday morning and you see the market's actually like flat or down. And one of the big reasons, I'm gonna come over here to the TNX, is bond prices rallied hard over the night. Okay, they rallied real hard to a multi-year high. Past couple of years, it hasn't even been this high. Now, we're not back to like pre-pandemic. Actually, we are back to like pre-pandemic highs. Okay, so that's interesting. Kind of forgot where we were in the price levels. So we are seeing bond prices rise, and as they continue to rise, it's going to put pressure on other tech companies, companies that aren't making money and that kind of thing. So that could be something to watch. And it was something that definitely weighed on the market today for Friday. So where do I think we go from here? Well, I have bullish and bearish positions. So to me, I don't know if I care all that much. I am staying kind of small though. And what I am looking for is, yeah, I mean, I'm just kind of following this pattern, this line. If we come back down to the 400 level, makes a lot of sense. And today's candle, even though we did see some buying, we didn't get above Thursday's candle. The Qs tried late in the day to be above and engulf the body of Thursday's candle, but they didn't. So I definitely could see us selling down on Monday, Tuesday, especially with the bond prices breaking that higher today. So what I want to show you now is what I said I was going to look at over the weekend. We're going to look at two things really. So we are going to look at the futures, the S&P 500 on a monthly chart, and then this chart. This is the S&P 500 earnings over about almost 100 years, about 90 years, going back to the late 1929. The green line is just the S&P 500 price over this time period. But this is also on a logarithmic scale. And then this dotted line that you see going through the middle here, this is the long-term trend line, okay? And what you notice is whenever we get above it, we come back to it, right? That's what happens. It's a like reversion to the mean type of line, right? If you get above it, you'll come down to it. If you get below it, you'll come up to it. So that's the whole point of watching the line. And as we see, every time we get above it, we come down to it. And so here's the tech bubble, here's the housing bubble, and both times, so the tech bubble came down to it because we were super inflated. The housing crash, we actually just went right down through it and hung down below it for about 4 or 5 years or so. And then sometime around 2015, we started making our way up through it. And then recently, back in about 2018, 2019, we really started to move up higher away from this long-term trend line. COVID happened. That's what this big spike down right here is. Okay, so this is COVID, come down, and then we bounce. I actually think we were going into a wave 5 on this long-term bullish trend for an Elliott wave, wave 5. But with how far we are away, this is the other thing I want to look at, okay? So I cannot pull up a lot of data on the chart here. I wish I could, okay? But I do have a lot of data up here, and I don't need to go that far back because, I mean, that's pretty much it. But I wanted to have the whole thing up here for the simple fact that right here is when the 10 exponential moving average shows up on a monthly chart, right? Because that's what we're looking at. We are looking at a monthly chart. So anytime that we are over that line, that trend line, and we have a close below the 10 exponential moving average, we could start to see further downside. This is probably the only time period where we don't have that, but I would say if we ever have a dramatic sell-off within a month, because this is a 15% sell down in this 1 month, was back in August 98, and we closed below that, I would say that's a little bit too much of a move down to where it wasn't gonna, it's just like a snapback type of move. But when you get to the top here, like we never really close below the 10 exponential moving average until we get to right here, which is October of 2000. This is the first time period, so I'm gonna go zoom in on that. So I know some of y'all, that was kind of hard to see. That was about the first time period. And what you notice is we contacted the 10 exponential moving average for several months in a row before we actually got below it, okay? So that is something to potentially watch for, as we are inflated, and if we do get that close below that 10 exponential moving average on a monthly, I think that is clear indication of go ahead and buy protection, okay? And then we did have that 2-year sell down that pretty much went from late 2000 to early 2003 before we kind of bottomed out here. And then we took off on the rally. And then I would say all through here, we weren't really below it all that much. We did get below it right here. But the thing I would say and why that one might not be a good one to play off of is because we didn't contact the 10 EMA for the previous few months, okay? I would say we definitely need to contact it at least for the previous 1 month or so, maybe 2. The more the better, that kind of thing. The other thing to kind of know is there's not much difference between this level right here and then 2 months later. I'm going to zoom in a little bit so you guys can see this, right? So we got below it here. So if you missed that opportunity, then we get this solid sell down. Well, then the second month later, we do get a pullback almost all the way up to that point. So just because you missed that period of, hey, you know what, now I'm going to buy protection maybe at the top of this candle. Well, sometime in that next month, then you can look for that buying all the way up and then flip your positions or do that kind of thing. Okay. So here I would have probably discredited this one because we didn't contact that 10 EMA multiple times. And then we don't get below it again until right up in here. Right? And we had contacted it here, really close here, and then contacted it here and even got below it here, okay? I would say the 10 EMA, once you are above, and I would say not even just above, but a good amount above that long-term exponential trend line, I think that is a good indication of, hey, you know what, I'm going to go out, I'm going to buy some protection, or I'm going to take risk or protect my wealth, you know, whatever it is. Whether you liquidate assets or just buy insurance, puts, that kind of thing, hedges, different hedging, that kind of thing. I think that is a good thing to kind of do at that point in time. Here, I wouldn't have worried about it, as you already had the massive sell-off back here. You weren't going to get another one, that kind of thing. It was just really choppy here. It was just super volatile coming down here. So yeah, you're just gonna have a volatile time period, but I wouldn't have worried about a lot of this because we were actually at this time period, we were under that long-term exponential trend line. We actually didn't get back over it until about right here, okay? So once we got back over it here, and then you can look for maybe a potential play down, but at this point we're like right on top of it. I wouldn't have worried about it. I want to be clearly at a high price valuation type time period, and this wouldn't have really justified it to me. Obviously we were just really choppy in here, so you just would have had to deal with that. And then we don't really have another time period until here, so I wouldn't have probably cared too much here. Well, I mean, you definitely could have played this, right? Because we were a little bit extended on the upper side, so you definitely could have played this. But the thing that I probably wouldn't have done here is because we didn't contact the 10 EMA multiple time periods, so I wouldn't have worried about this. And then the same thing here for the COVID crash. We didn't contact the 10 EMA multiple time periods. Okay, we just sold right down, hit a lot of buying power, and then rallied. And you saw that it really didn't even take long to get back to all-time high. Maybe what, 6 months? 1, 2, 3, 4, 5, 6, 7 months. 6, 7 months. So it didn't take long to get back to all-time highs. So I wouldn't worry about that. But we have now contacted the 10 EMA on a monthly last month. So we'll see what happens this month. I do imagine we probably sell down, probably just hang out before we go lower into March. That would be when I think we do potentially go lower, would be in March. And then that might be a good time period to protect ourselves, okay? But we'll see if February gets below the 10 EMA. And like I said, if maybe, you know, you miss out on the opportunity to get in, you know, maybe look for the bounce that'll happen potentially a little bit later. Like if we look at the SPY, if we get down to this 400, we'll get a bounce when we get to this 400. Guarantee it, we'll get a bounce. And it might be pretty strong. We might come back all the way up to like 440 or so, but 420, 430, somewhere in that area makes a lot of sense if we roll back over. Anyways, I just wanted to share that with you. That is something that seemed to be pretty clear indication that if we are above, let me pull this up. So we are above this long-term exponential trend line. And then what is then the clear indication of, yeah, the market is done now. Let's go buy some protection. I would definitely say a monthly close below the 10 EMA. But that would be my plan, my game plan, is really watch that 10 EMA. And really that 10 EMA, if you want to know where that's at, that's currently priced at 440. So any close below the 440 level, which, sorry, I'm trying to get to a daily, below this candle right here, below this candle, below Monday's candle, January 31st. If we close February below that candle or March below this candle, then that is like we are under the 10 exponential moving average on a monthly, and we could potentially see more downside for a longer period of time, especially like over maybe 2 years. Okay. I know it might be blasphemy to really kind of think that. It's always weird to kind of think that, oh, you know what, it's new economics. We won't do that. And I get it. Like if you're new into the markets over the past couple of years, if the pandemic, if you're a new buyer in the pandemic, like this is what happens. You get all those retail people that come in, push the market higher at the end. And then that really kind of signifies the end of a trend. And this could be the end of a long-term trend, because we have been in this trend since the 09 bottom, okay, all the way back in March of 09. So yeah, I think it's just something worthwhile watching. I just wanted to find something that I felt like a little bit more concrete than saying, hey, my gut feeling. I think that's a little bit more concrete, as if we get below that 10 exponential moving average, especially when we're at higher inflated long-term prices compared to the historical trend, I think that is something that is worth watching. So I just want to let you guys know that I did kind of find something that's a little bit more concrete than telling you my guess. I mean, nobody cares about my guess, but we do have a little bit more scientific type of an answer. So that's really all I got. I just want to let you guys know that I did find something that looks a little bit more scientific than not. Alrighty, take care, Alpha Hunters.